Hey Nick, how you
Nicky,
doing?
what's up?
Hey folks, how are you?
We're
We're
not
j-
too bad. What's going on?
Last week I closed the weekly recap. I said it was shameful how we closed the week because so much good had happened. We had some great earnings, most notably Apple, what kind of numbers they delivered, and I thought they would definitely provide a put for the markets, and I think they did. Without Apple last week, I think the week would have been awful, absolutely awful. Can you imagine had Apple been down like tremendously and not in the high 115, 117, 118 level? It would have been a disaster, probably for the markets. But really, I keep saying it every time I come on. It's probably a running joke, but it is no joke because it is a basis of how I make money. And the fact that the variables, the macro setup globally is still the same in spirit. Some of the variables are taking turns running this way and that way. Mainly, I'm talking about the bonds and rates and currencies. Just like QE everywhere, basically either rate cuts or money into other people's economies, except for us. The dollar is strong as can be. So, I had a few worries, but really the Friday ended on a shameful note. And I said, by Monday, if we don't have any new negative headlines, we should stabilize. And indeed, we did after a pretty wild day in the market yesterday. But yeah, I held the line on the longs. I collected a lot of premium. That's the byproduct of having a high VIX. I love that. I usually don't call for it, but if it's there, you can pay your bills really quickly. Um, for example, yesterday, if you sold the credit put spread 1925, 1915 on the SPX, you collected about a dollar, if not more, in the morning, and you could have closed it for 10 cents or 20 cents in the evening. So it would have been a nice 80-cent scalp if you were nimble enough to do it. And
Nick.
that's what I've been doing.
Nick, I want to talk to you because I would discuss with you a lot of your strategies and stuff, and my background for risk and rewards, and I'm always thinking, well, if I sell the spread, for 70 cents, and it can go to $5, man. 430. I mean, you work with new traders, you work with veteran traders. How do you get them over that hurdle to,
Well, let me rephrase it. Okay, I'm assuming a $5 spread. Let's say in the SPX, let's say it has 2 weeks on it, as far as time frame. Last year, with all of its uber exuberance, the market itself managed what, 13% on the S&P, maybe.
Mm-hmm, mm-hmm.
This 70 measly 70 cents is over 15, 16% yield on money risked in 2, 3 weeks. Where can you beat that? With a trade that has a theoretical chance of success over 80%. You can't beat it. I mean, yes, it doesn't sound you're risking $4.30 to make 70, but the chances risk is twofold:
Yeah,
dollars at risk and risk of incident. People forget that. Dollars at risk is how much money can I lose, and I play with money I can afford to lose. Therefore, when I set the trade, I can go to sleep at night, waking up the next morning knowing I lost all of it. It's like, oh well, I tried, I lost. Number two is what are the chances of me actually losing money? If the chances are low, I'm okay with the high dollar risk because the yield is so attractive at the end. Plus, I can take the opposite bet on the other side and make it a 30% yield by making an iron condor, for example.
it's
So
a
if I sell the
great.
credit, yeah,
That's a great point you're making there, Nick. And risk of incidence. I love that term. I've never heard that before. Like it's said that way, and it's so true. I mean, if you've got a very small outside chance of something happening, well, you can assume to risk and not quite make as much. So it's still all just risk return. And when the risk of incidence is that low, that's why your strategy has so much alpha to it, short-term alpha.
yeah, and for taking long on a huge down day, the reason why I take the long is because I study the ranges and I'm comfortable with the defense lines ahead of my range. Where as I choose, I don't just take a long because hey the premiums are high, I sell the spread. The premiums are high, I sell the spread because I know that the spread has at least 2 or 3 lines of defense before it gets to it. And if it starts getting nervous for me, I buy a debit put spread, which I did. So I sold the spread for this week. I bought a couple of debit spreads for next week. I rented them for a couple of hours. Then market stabilized, and I sold the defense right back. for about even money, and sometimes you make some money on the defense. But I don't mind losing money on some defensive plays because they allowed me to stay in my with conviction in my trade, and the overall portfolio dollars, you'll see it move up because if you made the right call, overall you're going to be a winner. So if you don't trade willy-nilly and you don't chase, I have people calling me, is it time to sell a credit call spread when the market is down 1%? You do that, you're going to get hurt the next day. As a matter of fact, yesterday you would have gotten hurt the same day. So it's no, you don't do that. If you want to defend on the way down something long, you buy a debit spread that goes against your thesis as opposed to adding more risk of incident on top when it's cheap because the market had just dropped 1%. You don't chase it down. You don't chase it down, you don't chase it up.
Nick, a quick question for you here. I mean, you obviously had to cut your teeth in the options markets, learning about them, trading strategies. Do you have like a good story that kind of like taught you a lesson on these and something that, sticks out in your mind that, kind of is like a guiding principle?
Yes, I have a lot of lessons, but one that is cheap, and so many people make the mistake of hanging on for maximum gains. When you sell a spread, you take on risk and you collect a premium that's the most money you can make. And then as time ticks by and you're still correct with your position, then the premium depletes and then you can buy it back to close the spread and take off the risk.
Correct.
It's so tempting to leave it on until the last minute and let it expire worthless. It's not worth it. You close it when it's cheap. Period. I don't care
Yeah.
how far out of the money. I closed one yesterday that was a 1080 and on the RUT, which is now 1175. I had risk open. It cost 5 cents to close or 10 cents to close. I paid the $100 or $150 to close it because now I can sleep comfortably knowing that I don't wake up to a flash crash and I've lost 10 grand because of it. So little $100 here, $100 there sounds like it's throwing money, but if you want to make a living doing this, paying to close winners is part of the game. Taking losers is part of the game. You have to practice both of those, and nobody tells you that. It takes practice. It becomes a lot easier to decide to pay $100 to close risk, or to take a loss of $500 when you thought it was the end of the world just a couple of years ago.
Frees up your capital too, right?
It does free up margin. That's another thing. When you set a credit spread, margin is different here. Other than buying stocks, you're not borrowing money. They reserve the cash in your account, so they're cash secured trades. So whenever you open a credit spread, they take the maximum worst case scenario dollar at risk, and they say, "Hey, buddy, just like a credit card, you can't use that even though you have the cash in the account. This is reserved for this trade. As soon as you take the risk off on this trade, then we'll give you back that margin."
Nick, I want to just switch the script here a little bit, and I want to talk about crude because we have finally caught a bid here. It looks like 3 days ago we're trading down just in the 44 handle. Now we're over $50 in crude here. It was breaking out here again today. Do you think we've seen the low in crude, or is this kind of a bounce that's going to catch people thinking it's the low again? That's going to come back in and crush them.
Let me put my Dennis Gartman hat on, and
Oh yeah, I like this. The
I
Dennis
only
Garden.
buy things that if I drop them on my feet will hurt. No, to tell you the truth, crude I believe is it was an economic war, and I thought at the beginning they were trying to hit on Russia, but I truly believe it was between OPEC, mainly Saudi Arabia, and the West, mainly United States, and it was kind of like to show that yeah they're still in control. Well, they are in control. They dropped the price tremendously down here. Now I read the war ending in two ways. The Saudis won the economic war in the industry, meaning their industry can survive on $7 oil, no problem. It's cheap to pump. However, the West is winning the economic war in the country, the socio-economic war, because we thrive on low oil. They get clobbered on low oil because that's their entire income. So their societies, their economies, their people are suffering. Their industries are still surviving, I should say, but their people are hurting. Our people are very happy with low oil. In fact, I solved the mystery today. Where is that extra money going that everybody's saving at the pump? Into buying new cars or used cars, apparently, based on the AutoNation numbers they delivered today. So we're winning one part of the war, which I think is the more important part. So about a couple months ago, I said when oil was about 50, I think it was around early January, I said oil has no more reason to be pushed artificially down further than that. And then they dropped it down to the low 40s. And now we're back about the same place where I thought they have no reason to push it further back down. So left to its economic merit, I think oil should stabilize and creep up from here. I just cannot believe that demand got cut in half and then some in just a matter of months since the high 80s and 90s as far as crude.
Nick, we got a couple big reports coming here tonight. We got Disney going to report earnings. We also got Chipotle going to report earnings as well. You playing either of these?
I have not yet. Chipotle is worth a play, but it's always so expensive.
Yeah.
Uh,
Is
Premium
it just because the spreads are too wide in the options? Is that what it is?
It's because of expectations. I mean, what are they looking to move it? I haven't looked at it yet, really. Chipotle, it doesn't have a lot in the options market. They're looking to move it $50 plus or
Is that
minus.
what it's pricing? Is $50 move?
Yeah, yeah, I'm looking
Don't
at.
tell Dennis that. Don't.
Don't tell me that. I go and sell the straddle and I'll move 100 tomorrow.
Well, listen, nothing surprises me after the reactions. I mean, you saw what happened with who was it? Netflix. It's just the
Gotta
reaction
go.
is insane. It looks like, although the options market is very tiny action, it looks like 740 has a lot of interest. So is it going to be a lid or not? I just can't imagine. When it comes to earnings, all open interest data is pretty much out the window until after the fact. It kind of tells you where everybody's lined up to be, and I usually go with the flow because I'm not going to claim. I'm typically a contrarian when it comes to things like that, but with Disney, I can't imagine they're expecting the same kind of move. But with Chipotle, that's probably as good a lotto ticket as you get if you're willing to spend some bucks on it. But Chipotle usually consolidates a long time at a certain level, 6 to 700, 650, 670 to 700, and then boom, resets to a different level. They always deliver on comps, which is insane. And I can't imagine they have a bad story to tell with low crude prices. So I would bet upwards than downwards because it's a coin flip, really. And this is just a guess, and your guess is as good as mine. But if I were to play a lotto, I'll try to set up some sort of a debit spread.
We're on
Calls.
the line with Nic Chahine. He's a Marketfy Maven and author of Create Income with Option Spreads. Nick, we got just a few minutes left here, so I'm going to kind of go rapid fire here on a few issues to end this segment. First of all, Twitter. What I got lucky on some calls, some weekly 37s yesterday. I mean, this is one of the stocks. I'm not that huge of a fan of Twitter. I am on it. This thing's just looking so itchy to me here. How do I play the earnings on Thursday?
I went long yesterday. I still say Twitter is like Alibaba as a long-term plug your nose and buy it. For Twitter, somebody will figure it out. I keep saying it. That's as easily as I can say it. Somebody will figure out whether Dick Costello or Twitter itself or Google or Apple. It's too valuable. It's too valuable of a way of communication, of delivering information instantaneously, so simply. I can't believe people confuse it what it is. It is so simple in the concept, and they should try to stop changing themselves to suit the market. They will figure it out. I
Oh,
went long it. It's a guess. The market is lined up for 40, 41. So I just went long, and I just chose a long dated debit call spread, and I'm not going to look back. Same thing with Alibaba. I went long when it got down to the low, and I think it's a long-term hold. I think it'll pay my kids' tuition a few years from now, and I'm not going to worry about it.
did you
Well,
get dirtiness at 100 a little bit too, or did you? Are
I,
you
I did, but I cashed them out.
okay?
We traded Alibaba long every time it went down to 100. It bounced quite a
Yep.
few times, and then finally it broke down completely. There is some March lockup expiration that they say is coming and should be sizable, but they said that for GoPro. I think it didn't happen at the lockup expiration. So Alibaba delivers numbers. They don't have a story to tell down the line. They have a story right now. So if people want to sell it, other buyers will step in. That's my belief.
there's been buyers stepping in Alibaba. It seems like every single morning. The last 3 mornings we've been talking on the show here, Nick, how there's huge buy imbalances off the bat. So some institution just keeps saying, "Buy me another 200,000" every single morning. It seems like, and
Any,
stocks
any
popping up again on that, and that's the way these
anybody
institutions do it.
anybody that missed the entry point on the IPO, I mean,
Yeah,
these are IPO prices. On the
yeah,
day of the
Good
IPO, it
point.
went to 99 or something.
yeah.
So it's I mean, you can't argue with $1 billion a day. I mean, 9 billion a day. I'm sorry. So it's just
9 billion a day.
what did they do in one day on that whatever
Oh,
holiday?
on that. What's that holiday called, Brianna?
Black
Whatever Singles Day.
Friday. Oh,
Singles
Singles
Day.
Day.
Singles
Singles
Day.
Day.
Yep, yep. Okay, we've been on the line with Nic Chahine. He's a Marketfy Maven and author of Create Income with Option Spreads. I encourage you all to check out his product on Marketfy. Nick is always on the markets, giving you a kind of a unbiased opinion. I really like the way you don't get too bullish or bearish, unlike me and Dennis. But Nick, thanks a lot for joining us. We'll talk to you again next week.
No problem. I just dropped something in your chat room
Oh,
about
excellent.
TLT.
Oh, we were talking about that too last
Oh, that's been
week.
crazy. Yeah.
All right.
Okay. All right.
Thanks, Nick.